In this video, we're going to cover the turtle soup model. I have been asked by some of my commenters in prior videos to look into entry models, and so in this video, we're going to cover one of the basic ICT entry models. It's not really from ICT originally. It's from, I think, Linda Raschke coined the term turtle soup back in the 1980s, and that's where ICT got it from. But nonetheless, guys, it's going to be a very simple entry model to understand. Guys, if you like this content, if you want to support me financially, support me in a big way, please make sure to like, comment, subscribe, and use the affiliate links in the description box below. Guys, I've got affiliate links to Apex Trader Funding, MyFundedFutures, Earn a Trade, TradeDay, and the Trading Pit. So any of the prop firms that you're interested in using, please make sure to use the affiliate link in the description box below. Okay, guys, so in this video, we're going to cover the ICT turtle soup model. Now, the market is open and moving, so I'm going to head over to the ES, which tends to move a little bit slower than the NASDAQ, and I just want to show you some prior historical examples of what a turtle soup looks like. And again, this is going to be a little bit distracting just because the market is actually open right now and trading, and so you're seeing the market move. But guys, we're actually going to be looking at prior price action. Okay, guys, so this video shouldn't take very long because this model is very easy to understand. Guys, a turtle soup model is basically when the market makes a new high or a new low. So let's say, for example, that in terms of what ICT would teach, let's say that the market has run on some buy-side liquidity. So for example, here, we're here on the S&P 500, although this works really on any instrument. As a turtle soup is basically a little poke above a prior high or a prior low, and then the market going back in the opposite direction, and that's called a turtle soup. Does it always work? No. Can it be difficult to know when the market's going to turtle soup versus when it's going to break out? Yes. But you should know, guys, that the turtle soup model is probably the easiest entry model to visually see and to understand. So for example, the market made a prior high here on the Wednesday, the 3rd of July. We see that high came in at 55.95.75. That's 55.95 3/4. And then the market poked above that, made a new high at 55.97 evens. And then the market rejected that new high and went down 12 points. There's your turtle soup entry. So if you're looking for an entry model, the first thing to look for is when the market pokes above a prior high or pokes below a prior low and moves in the opposite direction. So I'm going to give you some more examples here. So here is another example of a turtle soup model on the ES. We're on a 15-minute chart, and as you can see, the market had a prior high, prior equal highs at 55.69 3/4. When the market traded above that for a few hours, and then it moved back down for a total of 11.5 points. So there we have another example of the market rejecting a new short-term high and moving back to the downside. Now, guys, let's see if that pretty much qualified. I'm going to say that qualified. Here's an example of the market poking below a new low and then moving back in the opposite direction. So we see that we had a low here formed on Thursday, the 4th of July at 10:30 New York local time, so pretty much at the market open. Later on, we can see that on Friday, the market came back and just dipped below that low, and then ultimately, guys, it went much higher, right? So that was going to be a turtle soup entry as well. Now, I want to just demonstrate to you that this concept of the market rejecting a new high and a new low really works on any number of instruments, not just the stock indexes. So let's go on copper futures here. Guys, here we have an example of a turtle soup entry right here. So these are on copper futures. There we see an example of a turtle soup where the market just dipped above a prior high and then moved back to the downside. So there's an example of a turtle soup on copper futures. Another example of a turtle soup entry here on copper futures from the opposite direction is that notice when the market came and ran below this prior low that I'm circling here with the cursor, Notice that the market rejected that and then moved significantly higher. So what you're looking for when you're looking, all right, is something going to turtle soup? What I would say, let's see if we can get on the NASDAQ and have a look, guys. So we're on the NASDAQ, and the market is currently moving, and we can see that we have sell-side liquidity here at 20,609 evens. Okay, so the market is moving in on that sell-side liquidity. What sort of candles are we looking for? Well, if we go back up to, this is on the NASDAQ, we're looking for these sort of long-wicked hammer candles. We're looking for the market to just dip above the prior high and form what's basically like a long wick or inverted candle, inverted hammer candle. That's kind of what you're looking for. You're looking for that to form right after the market makes a new prior high or a new prior low. Excuse me, runs a prior high or runs a prior low. That's what you're looking for. Guys, here on gold futures, we see the same thing. Gold futures dipping below here. Notice that the market, this candle here, basically a long wick or a dip into that low, that's what you're looking for. You're looking for a long wicked candle, you're looking for an inverted hammer looking candle. And when the market is actually doing this, when you're seeing it happen, it should be fast, it should be a quick rejection. That's what you're looking for when you're looking for a turtle soup entry. So guys, in my prior video on drawing an ICT chart, I got multiple comments on entry models. So this is the first entry model that I wanted to recover. I've covered many entry models on this channel, but this is the first one that I wanted to sort of recover, and that is the turtle soup model, guys. Again, you're looking for a move above a prior high that rejects, or you're looking for a move below a prior low that rejects. You're looking for a quick and fast rejection. You're not looking for it to really go much further than that prior high or prior low. You're looking for a long wick, or you're looking for basically an inverted shooting star sort of candle. That's what you're looking for. All right, guys. In this video, I covered the turtle soup entry model. I talked about how you can outline it on your chart. One of the easiest things really to see. It's not always going to work, but it's something that can pretty reliably work if you're on the look for it. Okay, guys, this has been R Trades back here with another video. I want to thank you for joining me. If you enjoyed this content, please make sure to like, comment, subscribe, and use those affiliate links in the description box below. And we will be back with you soon. Bye-bye.